Hi, my name is Allan Madan. I'm a chartered accountant and a tax expert in the Greater Toronto Area. Today's video is called Property Management Tips for Real Estate Investors. I'm also a real estate investor in the United States, Canada, and India, and I'd like to share my experiences on the best practices for property management tips with you. So let's get started. The first tip is to perform proper due diligence before purchasing the property. While this sounds like common sense, a lot of things can be missed if you don't plan for it properly. Some common items that you should look for when performing due diligence on a property is inspect the roof, the condition of the electrical system, the plumbing, and the sewer lines. I recommend that you hire a specialist in each of those areas to give you a proper and fair assessment, rather than hiring a general inspector who is a jack of all trades and doesn't necessarily know everything there is to know about roofs, for example. In addition to performing a physical due diligence, make sure that you also perform a financial due diligence. This entails asking the seller for financial statements, the rent roll, physically examining the lease agreements, and looking at the bank statements. Often sellers will be afraid to show you the bank statements, and if they are, stay 10 feet away from that property, literally. The second property management tip is to purchase an appropriate rental management software. For apartment buildings and larger properties, I recommend Rent Manager. Rent Manager is great to produce the financial metrics that you need to effectively manage your property. Rent Manager can also provide you with an inventory listing for all of the parts and materials on hand to avoid spoilage and theft. Finally, Rent Manager is great at producing income statements, so you can produce monthly or quarterly statements to analyze the profitability of your property. For smaller properties like a fourplex or a condo, a simple spreadsheet will suffice, or you could up it a notch and use something like QuickBooks, which is an accounting software package for small business. Tip number 3. Evict non-paying tenants. Every non-paying tenant has an excuse. I've heard them all. But make sure that you're tough and you stick to your rules. If after 3 days they have not paid the rent, put an eviction letter on their door. This is known as a 3-day letter, and usually scares the bejesus out of tenants, so they end up paying. If they don't pay, it's appropriate that you file a court order immediately, because there are statutory limitations on how long it takes before you can legally ask a bailiff to physically remove a tenant from your property. Tip number 4. Pre-screen your tenants. A little work ahead of time will save you a lot of headache and financial hardship down the road by making sure that you have the right tenants in place. Some of the factors that you should look to when choosing a tenant are: number 1, verify employment income. Look at the employment letter, call the employer to make sure that he or she exists, examine pay stubs for the amount of pay that they're receiving. Number 2, perform a credit check. A score of 700 or higher is excellent, but credit scores vary depending on the neighborhood where your property is located. Number 3, performing a criminal background check. You obviously don't want criminals living on your property. Number 4, ask for a landlord reference letter. If the previous landlord doesn't give a favorable reference, then you know something's wrong with this tenant. And number 5, interview the tenant to see how they are. Tip number 5, invest in security to make sure that your property is a safe place to live. Consider purchasing an inexpensive security camera system, using parking passes, or considering controlled access cards so only tenants have access to the common areas in your property. Tip number 6, prepare a monthly budget and stick to it. When preparing the monthly budget, make sure that you compare the actual results to the budgeted amount. If expenses are higher than expected or revenues are lower than expected, investigate the reason for the difference and take appropriate action. Tip number 7, choose the right tax structure before you purchase the property. It's sometimes too late to change afterwards. You could choose a corporation, a partnership, or operate as a sole proprietor. See my video on how Canadians should purchase U.S. real estate for the different types of options available for you to purchase real estate tax effectively. Thanks for watching. I hope you enjoyed this video. Please comment, like, and subscribe. It helps me produce better and greater videos for you. Also, get access to your free report, 20 Tax Secrets on How to Beat the Tax Man, the link for which is shown at the end of this video. Thanks for watching, and see you next time.